during the London session, you want to look on the 15 minutes time frame and look for something like this before we get to London, and then it will trace back and then send you down, or we are in London session and then it will form that pattern there, and then you look for continuation to the downside, right, to attack the previous day's low. Obviously, once you get the trade 2 to 1, you close most of your profit off and then you let the rest run. Okay, let's go back to this chart. Now, what I want you to also take note is, if by any means this high has not been taken, every movement to the downside, you should be considering it as what? Manipulation. So you're going to be looking for that same thing. If price happens to stop you out, okay, you still look for that same pattern, because if as long as that we've not taken out the previous day's high when we are bullish, any movement to the downside is going to be what? Retracement. You're not going to be buying the retracement. You have to wait for what? The strong low to form first on a 15 minutes time frame. All right, I hope it's making sense. Does anyone have any question? Anyone have any question? Okay, I guess no one has any question. Let's continue. So once we form the low, then you can start looking for price to go up. Again, remember the keyword, we don't have to be taking out the previous day high. Now, what if the previous day's high has been taken? Now, if the previous high has been taken, then this gives you the opportunity to go short. Okay, let me show you how it looks like. Say this is Monday, right? And price traded up and closed like this. Okay, and then this is Tuesday. This is Monday's high. Now, if we open Tuesday and then price does this, and during the London session does that, oops, during the London session it does this, this gives you the opportunity to go short. Okay, because this might be the beginning of a potential swing high forming. Okay, that the next day might potentially give you a lower high. So this one might give you a pullback and then continue going down until the end of the day, and then the following day price will pull back up and then continue going down, and this will give you your swing high on the daily time frame. Okay, so when you're looking at price, always look at it from this angle, or from this understanding that whenever we close bullish, the next day you're expecting price to take out this high and continue going higher. The chances are they will pull back a little bit, fake out, and then go and attack it. That's the usual price movement, and then the day will come back down and then price will close next day, form another one in here, and then continue going up to attack that every day. That's how price is moving. Now, the only day that you'll be looking to see something different will be probably Thursdays, that they can run this high and then break down, and that will begin their movement to the downside, right? So back to the idea of looking for trade ideas during the London or New York session. Once you understand how the previous day traded, once we go into the next day, you already have clues on the previous day what price is trying to do. Now, I've shown you a lot of things in price, so the best thing to do is on the previous day or in the previous day, try and identify a strong low, and then frame that price should not be going below that low for the next day. So as price was going up, at some point it would do some run on stops. Okay, the run on stops and then a continuation is gonna give you a definable dealing range or definable range that when price is pulling back, okay, you can start using this low and that high as your optimal trade entry, looking for levels where price should potentially do what? Reverse. All right, let's show you an example on this. Here we had on the 15 minutes time frame, if I zoom in, okay, we want to look for a swing low that price took out the low. So we can see straight away here, that's where we had a swing low, 1 2 3, and then price went below it and then went up. So we can reference this low here as a strong low, okay, and then move to the current dealing range, which is the current price action, and we can use this low to that high to frame optimal trade entry. So let me get rid of this and do this. So we can use that low to this high to frame optimal trade entry, and then send price to go and attack the previous day high. Now this is provided, okay, again I'm going to repeat it several times, is provided we've not taken out that previous day's high. Okay, so another example will be this one here. You can see that once we closed on this is Monday, Tuesday, once we closed on Tuesday, price did not go back to attack this high. Okay, so the idea is to look for what? Is to look for a strong low. So like I said, go down in price and look for strong low, a low that price took out the low and went up. So you have this low taking out this one and that one, and then price went up. Then you can frame optimal trade entry, but always make sure that you are trading inside the kill zone. Okay, we are trading inside the kill zone, or just wait for the kill zone to come and then look for that pattern that I talked about here. Look for the kill zone price to form this before or during, and then look for the pullback to go up, to go and attack the previous day's high. I hope this will make sense to you. Now let's dive in a little bit deeper. Now let's say price gives you this and then it goes up, and then the next day price comes down, okay, and then takes this low out, because I'm going into here. Okay, I'm going into here. What end up here is what I'm going to talk about. When price goes below a low, especially a previous day's low, if they don't close below it and then it rejects, what is that? It's a stop run. Okay, it's a stop run, meaning price is gonna go the opposite direction. The same thing applies to the upside. When price goes for a high, a previous day's high, and it does not close above but wicks it and then comes back down, that's a reversal, right? That's what I said. If we open price, let's say we close like this and we open, and then price goes and take out this high and then comes right back down with a wick. Okay, even with a body, if it's a body, now let me clarify something here. If it's a body close above this high, it means that price is going to continue going up. So anything coming back down is subject for a continuation. Now, make sure you write this one down. Okay, if they close above the previous day's high, right, it means that price is bullish, but it will come back down for a pullback before going back up again. So if they do close above the previous day's high, that's indicating bullishness. It does not mean it's a reversal. When they wick it, I mean when they go up and then reject and it remains a wick, then this is a potential reversal. Okay, this is a potential reversal. Therefore, that's when you don't want to be buying any bullish order block around here, because chances are it's gonna go through them. Okay, chances are it's gonna go through them. So if we get the close, then you look for continuation, but if it pulls back, that's better, because it's gonna find a discount. It's gonna find a discount array between your true low versus your true high, and then look to continue going up. Okay, vice versa. If it does the opposite, if it does this and it takes out this low and it does not close and it rejects, it means that price is bullish. Is going to look to attack that high. All right, I'm building up to something because that's the same things I used to take some trades today. So I want you to understand it so that you can also use that same idea to get some trades whilst we don't have these long-term moves that keeps happening. I mean long-term big moves that we're expecting. Whilst we are waiting for them, you can use this understanding in price to look for these kind of trades. All right, so the confirmation for price to continue going up is the close above, and the confirmation for price to reverse is the wick above. So let's say price has, let's use real price action. So here, okay, now there's a very fine margin between this one and that one. What you want to see is actually a close above this body. Okay, what you actually want to see is a close above this body or a close above this wick. Either way is fine. You just want a close from this high upwards. Okay, and once we close, is what bullish. Anything coming back down will be coming back down for a pullback. It's not going to go down for a reversal. But let's go back to the previous day where price took out Tuesday's low. Look at how it took out the low here, right? It took it with a wick, and once it took it with the wick, what happened? We were in the New York kill zone, and it gave you the pattern that I said to look for. Okay, it gave you the pattern that I said to look for, which is it runs out this high and then comes back down to the bullish order block, and then it runs all the way up to attack this high. Next day, what did price do? Price ended up bullish. What was the high of the day? Here. Going into London, have we taken it out? No. So what can I do in London? In London, I can look for my pattern, okay, and then trade it up. So what was the pattern? 1, 2, 3. Break, retracement, and then buy. And what are you looking for? You're just looking for your 221. So you're buying here, stop loss below there, and you're looking for your 221. You get more than 2 to 1. I think you get almost 3 to 1 on this trade.